Transaction that is classified as business combination transaction as per the definition of IND AS 103. Accounting of that is governed by acquisition method, that is also called a purchase method. So in this acquisition method, we need to first identify who is the acquirer in business combination transaction, and to find out this acquirer, we need to go in IND AS 110 to find out the guidance regarding the acquirer. So as per guidance of IND AS 110, we need to check who is having the power over the investee and who is exposed to the return of the combined entity, and the ability to use its power over the investee to affect the amount of investors return. So if all these three conditions are satisfied, the concerned entity will be classified as an acquirer. But there may be cases where we could not clearly identify who is the acquirer. In that case, IND AS 103 provides us further guidance to find out the acquirer. In this case, usually the entity who is the transferor of cash or other equivalent assets, or who is incurring the liability in combining entity transaction, is considered as an acquirer. Apart from that, the entity who is issuing the equity shares is called acquirer, but there may be case of reverse acquisition also, where the issuing entity may be classified as a accounting acquiree instead of acquirer. So when we are checking regarding the condition of issuing equity shares, we need to consider some other prominent factors also, like who is having the voting right in the largest voting right in the combining entity. In this case, we need to consider unusual and special voting rights, options, warrants, and convertible securities also. Apart from it, if there is no clear-cut majority of voting rights, we need to check the existence of largest minority voting rights, and we need to check who is having the ability to elect, appoint, or to remove majority of governing body members. It means we need to check who is having control over the combining entity and who dominates the management of combining entity. And we need to check the term of exchange of equity interest. Using usually the combining entity who pays premium is called as a acquirer. Apart from it, third condition is usually the entity who is having significant greater size as compared to other combining entities will be classified as an acquirer. So when we identify the acquirer, first we need to check the IND AS 110 guidelines, and if there is not clear-cut indication about the acquirer, then we need to check these three conditions. Those are given under IND AS 103.